Good morning, my dear students. Welcome back to online classes. In this class, we shall discuss about the few new transactions which are affected to our chapter dissolution of partnership firm. First, we have to read the question. What the information is given? What is the new information that we have to give more and more priority about that question only. Here, the question is X, Y and Z are partners sharing profit and losses in the ratio of 3:2:1. Their balance sheet as on 31st March 2020 was as follows. So, balance sheet details they are given, liabilities amount, assets amount. Under liabilities, capitals they are given for X, Y, Z 3:2:1, that is 30,000, 20,000 and 10,000 only they are given. Next, Mr. Y's loan they are given, life policy fund, creditors, investment fluctuation fund. In the asset side, let's come to the asset side. Assets side they are given, machinery, investment, stocks, like joint life policy, debtors, profit and loss account, cash and bank. And later, on the above date, the firm was dissolved. Therefore, joint life policy surrendered for rupees 12,000, machinery is realized rupees 55,000, stock rupees 15,000, debtors realized rupees 6,150 rupees they are given. Adjustment number 2, investments are taken over by Mr. X for rupees 17,500. It was found that investment not recorded in the books worth rupees 3,000 and the same is taken one of the creditors. It is totally new adjustment for you people. Expenses of realization amounted to rupees 600 they are given. So with the help of this information, we have to move to prepare realization account, partners capital account as well as bank account. So these are the accounts which are compulsorily we have to prepare at the time of dissolution of partnership firm. Okay students, first we have to classify the transactions of, classify the first balance sheet and adjustment. Later on we have to move to the solutions. Just we have to move to the imagination. X, Y and Z are partners. So totally how many partners are there? 3 partners are there who are available in our partnership business. So their sharing profit and losses in the ratio of 3:2:1. So profit sharing proportion they are given 3/5, 3/6, 2/6 and 1/6. Their balance sheet as of 31st March 2020 was as follows. So balance sheet also they are given. So with the help of this balance sheet we have to prepare the account. So here the details are X capitals they are given. All 3 capitals will come to the partners capital account only. These will be considered as a opening balances of the partners capital account. Mr. Y's loan. Don't confuse. Here partner is Y, X, Y and Z. Here what the information is given? Mr. Y's loan. Mr. Y is a partner. Mr. Y's wife. Mr. is nothing but his wife. So his wife is not a partner. If any loan has taken from any other than the partners, it will be considered as a liability. It will come step 2 of realization account. So this will be considered as a liability. Just X loan, Mr. Y's loan, Z's loan they are given in the question. Means we can imagine that it belongs to the partner, so it will come to the bank account. So here what will happen? Mr.'s the concept, Mr.'s is given. So Mr.'s is nothing but it will come to the liability. It will be treated as a liability. Apart from the partner's name, any other name will give means it is a liability. It just came to the name of the partner. Considered as a not a liability. Step number 2 will come. Life policy fund. The concept fund is given means it is always come to PCA, partners capital account. joint life policy fund, investment fluctuation fund, reserve fund, general reserve, reserves and surplus. If we use these terms, means it will be considered as a partner's capital account transactions only. So this is a new concept which is arised in this question. Creditors liability, so it will come step 2. Investment fluctuation fund, it is also a new thing, it will also come to partners capital account only. So totally, so partners capital account, how many transactions are there? Capitals, that is the one, and Mr. Wise loan, so it will come step number 2. It will get life policy fund and also investment fluctuation fund. Joint life policy fund, if the term used in the fund in the liability side, it will belongs to the partners capital account. So these are the new transaction. Let's come to the asset. Machinery, investment, stock. So here they will create one more confusion here. Joint life policy is given in the asset side. Life policy fund given in the liability side. Don't confuse. Assets and whatever they are given, it will be considered as an asset, and the liabilities policy fund is given, so it will be considered as a liability. It will become to the partners capital account. First, all the assets will come to the realization account. Step 1. First step number 1, we have to write all the assets except profit and loss comes to partners capital account. Cash and bank will come to the bank account. We have to classify this one. So assets side 3 classifications will be there. So step number 1 will come few assets, and step realization profit and loss account will comes to the partners capital account, and bank account will comes to the bank transactions only. So these are the accounts we have to get. Next, come to the adjustment. So what the information they are given on the above date, the firm was dissolved. So after this classification, they will give the information about the closing of the company, that is the firm was dissolved. Here, how the firm is dissolved is joint life policy, surrender. Here the term surrender they are given. Surrender is nothing but repaying or selling. We have to imagine that one. So they will be used the transaction with different angles, but the situation will be demanded. So according to that situation, we have to understand the location. So here what they are given: joint life policy was surrender for rupees 12,000, machinery realized rupees 55, stock rupees 15,000, debtors realized rupees 6,150. Totally this will come to step 3 under bank account. Adjustment number 1 totally will come to the step number 3 and bank account. And adjustment number 2, it will say that investment were taken over by Mr. X. So here investment is an asset that will be taken over by a partner for rupees 17,500. So it will come step 5 and partners capital account. Adjustment number 2 totally it will come step number 5 and total partners capital account. So here adjustment number 3, Mr. Y discharge. The term discharge is nothing but paid or repaid. His wife loan. Here what will be happen? The partner will pay his wife loan and it will be added to the partner's capital account only. So first we have to write adjustment number 3 under step number 6 of realization account. Realization account debit side we have to write under step number 6. Again where we have to write partner's capital account. Credit side we have to write the transaction. Totally Mr. Y discharge his wife loan, step number 6, and the debit side of realization account. And the same transaction we have to write under credit side of the partner's capital account. So this is also a new adjustment for you people. And finally, adjustment number 4, it was found that investment not recorded in the books. One of the investment that the company has invested in some way, while they are going to close the company, they forgot that one. So when the company is going to close, they have to realize and remember that investment rupees 3,000, and that 3,000 and the same is taken one of the creditors. At the time of closing of the company, what the unrecorded investment they have to get, that will be received and paid to one of the creditors. That means this adjustment will totally differently we have to treat it in this concept. So actually the value of creditors is 18,500 rupees we have to pay to the outsiders. Out of that value, so this 3,000 it will become in middle of the year that we have to pay to directly to some other person. The remaining balance will be considered as a liabilities paid. We have to show that one. So totally this adjustment will come step number 4, and that value directly will come to bank account only. We have to get this one. And last adjustment, expenses of realization amounted to rupees 600, so it will come step 7 of realization account, and it will come to bank account because realization expenses will be paid by the company only. So these are all the transactions and these are all the classifications which they are given. With the help of this classification, we have to prepare the 3 ledger accounts, that is the realization account, partners capital account, as well as the bank account we have to prepare. Now, just we have to draw the columns for realization account only. So we have to draw the columns for realization account. So here realization account, what are the columns we have? So already we have to discuss in the previous videos and all. So first we should write the name of the account, realization account. Realization account. First we should draw the columns for realization account. So here realization account we have all the steps we should follow. Enter the transaction steps what we have to follow in the previous videos and all. First we should draw the columns. And we should fulfill the conditions. First we have to fulfill the condition and we have to write all the steps in this question only. Or 7 steps we have to follow. 8 steps will come, 9 steps will not come in this chapter, in this question only. So let's come to step number 1. What it will say? Step number 1, always we should write that is only 2 realizable assets. Realizable assets. At book value, PV is nothing but book value. We should write all the assets in their book value except profit and loss account and cash and bank. Remaining all the assets we have to write orderly. So here they are given first point to machinery. To machinery. The value of machinery is 40,500. 40500. To machinery they are given. After that, to investment. To investment. To investment. The value of investment is 20,830. After that, to stock in trade. Stock in trade. So the value of stock in trade is 17,550. 17,550. 17,550. So after that, stock in trade. So they are given joint life policy. To joint life policy. To joint life policy. The value of joint life policy is 14,000. After that, debtors they are given to debtors. Debtors they are given. The value of debtors is 8,700 rupees. they are given in the balance sheet. So totally 1, 2, 3, 4, 5 assets they are given. So we have to enter all the assets, that is realizable asset. Realizable in the sense is nothing but they have to sell that asset. The company will have the properties. In that properties, these are available that we have to sell into the open market in the present while we are going to close the company. So step number 1 is there. Apart from this, we won't have any other assets. So profit and loss account is there, that will come to the partner's capital account, and also the bank is there, that will come to the opening balance for the bank account. So step number 1 we have to complete it. Let's come to the step number 2. Step number 2 always come to the right hand side. We should write by external liabilities at book value. By external liabilities at book value, the company will have two liabilities that already we have to classify in the previous balance sheet. Which are those liabilities? Number 1, by Mr. Y's loan. So whoever the partner, Mr. Y, his wife also given a loan to the company, so that will be considered Mr. Y's loan. The value of the loan is 10,000. This is a liability because Y is the partner, Y's wife is not a partner. Next, by creditors. The value of creditors is 18,000 rupees. Sorry, 18,500 rupees. 18,500 rupees. These are the values which we have under step number 2. Step number 1, all the assets. Step number 2, liabilities. Step 3 always come to the credit side only. We will write by bank account. In bracket, we have to mention assets realized. Assets realized. So the company will have 5 assets: machinery, investment, stock, joint life policy, and debtors. Totally we have 5 assets. Out of those assets, the company, how many assets has been sold, how many assets has been taken over, that information has given in the adjustments only. So here they are given joint life policy surrender. Surrender is nothing but sale. Sale is nothing but realized. Machinery, stock, debtors, they are given. Out of 5, 4 assets are sold. 1 asset they are not selling. So what happened to that asset? That will be taken over. So totally 5 assets will be cleared. So here we should write clearly by joint life policy. So actually the policy when they are taken, the value of joint life policy is 14,000. After few days the company is closing, so the company only receive the policy and they have to repay the amount. What is the amount they are going to pay? 12,000 rupees. This will be the present value they are receiving at the time of closing of the company. After that, by machinery. The value of machinery they are given 55,000. After that, by stock in trade 15,000. After that, by debtors 6,150 rupees. So all the 4 assets we have to make. So the total of these 4 is we have to get 88,150 rupees. This will become under step number 3. Step number 1, always assets realizable asset and book value we have to write. Number 2, we have to find out the liabilities. Step number 3, we have to sold the asset. Step number 4, we have to pay the liabilities. So how many liabilities we have? 2 liabilities are there. Out of these 2, wife loan is taken over or paid or discharged by some other person, and creditors will not taken over anyone. So we have to pay compulsorily. We have to write to the debit side 2 bank bank account. In bracket mention that liabilities paid. Liability paid. So actually how many liabilities we have? Two liabilities we have. Out of these two liabilities, one is discharge, one is not discharge, that we have to pay. Which is not discharge to creditors. That is 18,500 rupees. We should write in the inner column because for this there is adjustment number 4. So what it will say? It was found that the investments not recorded in the books. Whenever the previous balance sheet they are prepared, and that balance sheet they didn't mention about some investments which is not recorded. The value of that is 3,000. But this same 3,000 has been taken over or one of the creditors. Out of that 3,000 has paid to some creditor, remaining amount will get paid later. So here minus unrecorded. Unrecorded investment. Unrecorded investment 3,000. Therefore, we have to get 15,500. 15,500 rupees we have to pay later, not present. Later we have to pay this. This is step number 4. Step number 5. Always any asset taken on this, we should write step number 5. We should write by partners capital account. In that by X capital account. Why we should write this one? Investment taken over. If any asset taken on this, we should write credit side. So investment taken over. So value they are given 17,500. So actually the value of investment is 20,000 in 30 they are given. Out of that the person has taken on the investment and he is given to the company, that is 17,500. This will be considered as a income. This is step number 6. Sorry, 5. So here 5 assets will be there. 4 assets will be sold, 1 asset will be taken on. It is clear, no other extra assets will be there. Let's come to the liabilities taken over. Out of 2 liabilities, 1 we have to pay. 1 has been discharged. The information is given in the adjustment number 3. That will come to the debit side of this account. 2 partners capital account. Here we have to write which is that partner? Y capital account. In bracket mention that wife loan taken over. Discharge is nothing but he is transferring to his account. That amount will be paid by Y and the company will pay to Mr. Y. So here the value is not given. So just the discharge is given. The book value, what is the value? 10,000 rupees. This 10,000, the Y has been paid compulsorily. This is about step number 6. 1, 2, 3, 4, 5, 6. Let's come to the step number 7. Step number 7 always included dissolution expenses or realization expenses. Whoever may be paid, whether the company or else a partner. But first we have to record the step number 7 of realization account, that is debit side, and later based on the situation. So we will write to bank account. In bracket we have to mention realization expenses. Value is 600 rupees they are given. So all the transactions we have to complete it. Now it's time to close the realization account. Before closing the realization account, once we have to analyze which side we have a highest value, whether it may be left hand side, right hand side, debit side or credit side. But in this this question. Credit side only we have a highest value. Therefore, we have to get profit only. If we have a debit side highest value, then the credit side means the incurring losses. So in this question, we didn't incur any losses. Find the time of closing of the company itself. We have to get the profit. The total is 1,34,150. 1,34,150. The same value should write here also 1,34,150 rupees. Out of this, we should deduct all the debit balances. We will get a difference. The difference will be called as a profit. 6,470 rupees we have to get. For this, we will give a name to partners capital account. In bracket we have to mention profit. What we have to get? We will get a profit. And what we have to do that profit? We have to distribute it according to the profit sharing ratio between the partners X, Y, Z. So here 6,470 rupees into 3 by 6, 2 by 6, 1 by 6. Therefore, each partner will have one share, that is 3,235 for first partner, 2,157 last partner, 1,078 rupees. While making the addition of these three, again we have to get this one only 6,470 rupees only. If we don't get that value, we did a mistake. If we get the same value while preparing these two or by adding these two, means we are incurring a profit only. Let's we have to move to preparation of the partners capital account, and as usual bank account we have to prepare. Let's we have to draw the columns for partners capital account according to the situation, according to the assumption and imagination. We have to prepare the accounts only. First, we should draw the columns for partners capital account. So we will write the transaction particulars. And X, Y, Z. And the credit side again particulars. X, Y, Z. Debit and credit compulsorily we have to write under partners capital account. Not only partners capital account, except balance sheet we have to write all the places. That is debit and credit is compulsory. These two will be considered as a four heads of the business, and heading we have to write compulsory in the middle of the every account. So here, step number 1, always in the partners capital account we should transfer opening balances, that is by balance brought down. Balance brought down. The balances which is given in the previous balance sheet, that is 30,000, 20,000 and 10,000. 30,000, 20,000 and 10,000. 30,000, 20,000 and 10,000. After this, once we have to go to the old balance sheet, partners capital related transaction will be available or not. Just we have to check it. So here, partners capital related transactions, they are given. First one is joint life policy fund, investment fluctuation fund, and profit and loss account they are given. So according to that we have distributed according to their ratio. First point they are given, life policy fund by life policy fund. What is the value of life policy fund? They are given in the question 14,014. This 14,000 rupees we have to distribute 3:2:1. That is 3/6, 2/6 and 1/6. First partner will get 7,000. First partner will get 7,000. Second partner will get 4,666.6 we have to get. So we should be make it as a round-up value or convert it to a particular value. That is 4,667. And the last partner 2,333.333 we have to get. So already one value we have to make it round-up value. So we will write 2,333 only. While adding these three, again we have to get the same value of rupees 14,000. Otherwise, we did not write a right distribution. Next, after that, one more thing is given in the liability side by investment. INVT is nothing but investment. Fluctuation fund is given. Investment fluctuation fund is given. So, what is the value of investment fluctuation fund? 6,000 rupees they are given. So, this 6,000 rupees we have to distribute in the ratio of 3:2:1. That is 3/6, 2/6, 1/6. First partner will get 3,000 rupees. Second partner will get 2,000 rupees. And the third partner will get 1,000 rupees as the share of investment fluctuation fund. So, liability side, three transactions they are given. Capitals we will transfer, life policy fund that also transferred, and investment fluctuation fund that also we transferred here. So, but in the asset side, one more value they are given, that is profit and loss account. In the previous balance sheet, right hand side is there. Now we have to write left hand side. So, we will write 2 profit and loss account. So, value they are given in the balance sheet, that is 1,500 into 3:2:1. 1,500 into 3:2:1. First partner will get 750. Second partner will get 500. Third partner will get 250 rupees. These are the transactions which is came from the previous balance sheet. Apart from this, no other transaction they are given. Let's come to the first account, realization account. In this account, somewhere we use the term partners capital account. That values will transfer to the opposite directions of the next account. So step number 1 we did use the term partners capital account. Step number 2 here also we did use. Step number 3 we did use. Step number 4 also we did use. Step number 5 we use the term partners capital account. So which side? Credit side. For whose partners capital account? X partners capital account investment taken. That will come to the opposite side, that is credit side of the next account by realization account. By realization account. Why we should write this value? Investment taken over. Who is going to take on the investment? So partner so here not only investment, asset taken on this, it will come to the debit side. To realization account, investment taken over, X has been taken on the investment 17,500. Why percent is hyphen. Step number 5. Step number 6, again somewhere we have to write to partners capital account. Who is capital? Vice capital account, wife loan. That will come to the credit side. So wife loan discharge 10,000 for step 1. So step number 5 and 6 is completed. Step number 7, bank account, identical. Step number 8, to partners capital account, profit. So already we distributed here that the debit side we get the difference, that is right, we have to transfer to credit side. So by realization account, bracket profit. The profit already distributed here 3,003 sorry 300 sorry 235. Second partners 2,157 and the third partner 1,078. Therefore, we have to get exactly the values of this one. Now it's time to close the realization account and we have to make the total. So in this question we have to get the total. Credit side only we will get the highest value. First partner's total is 43,235. Same value should write debit side also 43,235. Out of this 43,235, deduct these two values, we will get 24,985. 24,985. 24,985. So second partner's total we have to get 38,824. 38,824 rupees we have to get. The same value should have debit side also 38,824 minus 500 we will get 38,324. And the last partner's total is 14,411. 14,411. Same value should write 14,411 minus 250. We have to get 14,161 rupees. For this we will do a name to bank account in bracket capitals balancing figure. This amount we have to pay at the time of closing up of the company. So these are the transactions which we have to get under partners capital account under step with following the particular steps only. Let's we have to move to the preparation of bank account. You should draw the columns for bank account. So next account is bank account. We should draw the columns for bank account only. And we have to fulfill all the conditions of bank account. We will write particulars, amount, particulars, amount, debit and credit. We should write compulsorily. So debit and credit we have to write compulsorily. So each and every account opening balance is compulsory. So for bank account also the opening balance we have that is available in the previous balance sheet, that is 5,420 rupees they are given. So we should write two balance brought down. 5,420 rupees they are given. So apart from this, remaining all the transactions will be affected from these two accounts only. So in this account, we use the term somewhere bank. That amount we have to transfer here. In the step number 1, we didn't use the term bank. Step number 2, also we didn't use the term bank. But in the step number 3, we use the term bank. What is that? Assets realized. How much? 88,150. So this value we transferred here. Which side we will write? Credit side. And the next account we will write in the debit side only. To realization account. In bracket, we should mention assets realized. Assets realized. So actually the value of assets realized already we should calculate 88,150 rupees. Already we have to write that one. Next, step number 4. Here also we use the term. What is that? Liabilities paid. So we will write directly credit side by realization account. In bracket mention that liability liabilities paid, that is 15,500, because out of this 18,500, 3,000 will be settled to one of the creditors and the remaining amounts we have to pay at the time of closing of the company. This is step number 4. In the step number 5, we did use the term bank. Step number 6, we did use the term bank. Step number 7, we use the term bank. So which side? Debit side is thrown will come to the credit side of the next account. That is by realization account. So in bracket, dissolution, expenses. So 600 rupees. So remaining transactions will not come into this account. Let's come to the second account, that is partners capital account. So here somewhere we use the term bank. Which side we have to write? Debit side. So next account it will come to the credit side. We will write by partners capital account. X, Y, Z. For their account we will get the difference. First partner will get 24,985. Second partner 38,324. Last partner 14,161. So all the transactions they are given. So no other partner's loan is there. So by loan will be given, that will be discharged and it will come added to the particular partner's account. So therefore we don't write separately. So now it's time to make a total 88,150 plus 5,420. So totally 93,570. Similarly we have to write 93,570. So therefore all the transactions we have to transfer, all the contents we have to fulfill. Now it's time to make a total. We will get the equal total also. Now all we have to get the bank balance equally. My dear students, just this is a basic and very easiest question for you people. We will not get again and again. So be careful, be alert. If anything is there means, so I will clarify your doubts. If you have any doubts means, you can call me directly. I will make a solution for your doubt and all. So once again my dear students, so in the college we have an availability of the study material. So be careful, I am saying pointly. So in the business studies also the study material is prepared by college itself, and also the accountancy theoretical concept, whatever the material will be there, that we have to provide it for you people. The cost already and if sir has been informed for you people in the group of WhatsApp and all, that is so 60 rupees for the accountancy material and 200 rupees for business studies material. So students, there is a limited stock and limited will be available. So each and everyone must and should come and collect the material from the college itself. Otherwise you people only the losers. So these materials we have to provide it only for the toppers only. Once again, my dear students, come and collect the material. Even though in this question few new adjustments will be there, if you have any doubt on that, please you have to give it to me, call me directly. I will give a solution for your doubts and all. Thank you everyone.